Nick Hodge here, the editor of Foundational Profits, excited to tell you about the June issue and what you can expect inside of it. There is a lot going on in the markets. The S&P has moved higher for the first 6 months or 5.5 months of 2023, and lots of folks out there think we're in a new bull market. I take a long look at the S&P 500, what has been driving it, and conclude that we're not out of the bear market yet. There's a lot of reasons in this issue that show why, starting with liquidity. And liquidity is something I've been talking about for a couple of months. In fact, last month I said liquidity was going to be the word of the month and perhaps even the year, and that's shaping up to be correct. We had a debt ceiling deal recently that averted a little bit of fallout or catastrophe in the market, saved the country from defaulting, but there's still some bookends that need to be put on that. Specifically, the Treasury now needs to refill its coffers, and that's going to take over $500 billion of liquidity out of the market in the coming weeks. That liquidity has to come from somewhere. There's reason to suspect that it could come out of stocks, that is, stocks being sold down as a result. We also have ongoing tightening with the Fed, and I'm not just talking about recent rate increases, which have been the fastest on record and the highest on record, going up to 5% on the federal funds rate in 12 or 14 months. But I'm talking about quantitative tightening by the Federal Reserve, which is ongoing and taking another $95 billion of liquidity out of the market every single month. And then you'll soon have the resumption of student loan payments, which have been on pause since COVID relief measures were enacted 2 or so years ago. That will see 40 million Americans return to average monthly payments of $400 on their student loans. That's another $16 billion a month or $192 billion a year of liquidity that's going to be taken out of the system going forward. And that's why that's the next concern for this bear market. You also have unemployment starting to tick up, and ISM numbers on the services and manufacturing side that are showing ongoing slowing and or contraction. So a long look at the S&P and the macro markets in this issue for you. There's also a very deep dive on gold, probably over 1,000 words just on gold, complete with charts. I go into recent annual production, central bank buying, ETF flows. I look at the fundamentals of the producers and the junior sector as they relate to the gold price. And so lots to chew on about gold in this June issue of Foundational Profits. I also highlight 2 gold names that we're buying now, and of course that I own as part of my safe long-term portfolio, because that's what this letter is all about, what I'm doing with my longer-term safe capital. Uranium gets some play in this June issue as well. We take a look at jurisdiction, why it matters, and some events and words that have been spoken lately that speak to why jurisdiction matters in the uranium space and why having assets in North America is so important. We, of course, have a couple of uranium stock buys as well. And then in sort of the editorial section of this issue, I take a look at the bureaucratic demise of Logic through a recent class action lawsuit that took 10 years to resolve and just came to a complete nonsensical conclusion that highlights the wrongheadedness that is currently showing in the government and the various branches of government. So lots to unpack in the June issue of Foundational Profits. Lots of stocks that are buy rated, lots of analysis on the broader market and the gold sector. And I do hope you will check it out and join us by becoming a new member.